If it's news about Christian faith or values, they won't carry it. We will. You can hear it on The Don Kroah Show. Live from the WAVA-FM Passport Auto Group studios. It's The Don Kroah Show on 105.1 FM, WAVA.
The Don Kroah Show is brought to you in part by Passport Auto Group stores. As an essential business during COVID-19, Passport is ready to meet your car buying or servicing needs and do it with complete safety and security from one of their 9 convenient locations. Whether it's a video walkthrough of a vehicle you're interested in or purchasing a vehicle either online or in the comfort and safety of your own home, check out the superb services waiting for you at PassportAuto.com. That's PassportAuto.com. Hello there, folks. Welcome to another hour of the Don Kroah Show, Monday through Friday, 4 to 6 each afternoon. We get together, talk about stuff going on in the world. And as with every other aspect of our lives, our personal lives, business lives, jobs, the mortgage and real estate industry also dealing with the impact of COVID-19. Joining us to talk about some of the things in that area of life that he is well informed about, longtime friend and advertiser here on WAVA, Mark Livingstone, founder and president of Cornerstone First Financial. Mark, my friend, how are you?
Hey, Don. Great to talk to you. Long time no see.
Indeed.
I'm doing wonderful. How are you?
I'm fine, sir. I am fine. And as Dave Ramsey loves to say, better than I deserve.
There you go. There you go. Well, I'm sorry that I can't be in studio, but I understand with the social distancing that we had to do this on the landline. But I'll say great to talk to you, my friend. You're looking good as ever.
Well, thank you. Thank you. And you as well. Talk about what we're seeing in the mortgage real estate industry this year of 2020. First of all, in general, kind of give us a general picture. And then, of course, how has COVID-19 impacted all of this?
Absolutely. Well, so Don, this is the craziest thing is that in the first quarter of this year, we saw more mortgage originations, purchase and refinance in this entire country than we usually see in 3 years combined.
Wow.
So on a typical year, you'll see $3.5 billion originated in mortgages, and we did just over $12 billion just in quarter one of 2020 this year, because of the unprecedented low interest rates due to the trade wars and tariffs with China, and just the economy brought the rates down, and there wasn't enough money. So we saw lenders artificially inflating interest rates. Now, this is pre-COVID, and we saw the lenders artificially inflating the interest rates to slow down the volume of what we were seeing within the mortgage industry. And for the first time ever, we saw what I'm calling a decoupling. We saw the 10-year Treasury dropping while mortgage-backed securities went up for the first time ever. So the economy was dictating that rates should be lower, but interest rates were going up. And then along came our friend COVID. And that was mid-March. And something had to change. And all of a sudden, COVID hits, and lenders don't know what to do. So all of a sudden, they start eliminating different programs. For example, investment properties. If you wanted to purchase an investment property, it's harder than ever through COVID, because the first kind of property that somebody's going to let go because of unforeseen circumstances are going to be investment properties, right?
Yep.
So nowadays, investment properties, if you want to buy an investment property, you got to put down 30%. The interest rate's up in the high 4s. You have to sign a piece of paper that you have experience renting properties. Then they start doing away with cash-out refinances. Cash-out refinances because they were afraid that people would then take the cash out and then go into forbearance. So while the economy is dictating that rates should be a lot lower, programs are being taken off the floor. So now, let me pull it full circle for you. Now that we have had the liquidity issue that we had a couple months ago clear up a little bit, so there is a lot more liquidity, interest rates have come back down to realistic levels that are dictated by the economy. So in the 16 years, Don, that I've been coming on your show, I can honestly say I've never seen a time such as this with interest rates as low as they are. We are offering rates in the 2s for the first time ever on a consistent basis. on a rate and term refinance, 2.5% on a 15-year, 2.99 on a 30-year. So pulling it full circle, yes, it's a great opportunity because the rates are so low. There has been a diminished number of products available, i.e. the investment properties I just mentioned and the cash out. But if you're looking for a rate and term refinance, it is the lowest I've ever seen it.
So who is going?
I gave you a fire hose of information, didn't I?
Oh, that's good stuff. It's good stuff. Excellent. And I would not expect anything less of you.
Well, thank you. Okay.
Now, going into the spring and summer months, who are going to be in the best or the most advantageous position? The sellers, the buyers, or both?
I would say both, because here's what's happening is that the sellers are coming off the sidelines.
Yeah.
And you have people that have to move. So with the interest rates as low as they are, the lowest that I've ever seen, you're going to have people that now qualify for a bigger loan amount than they previously did because of the rates are so low. So while we're seeing people come off the sidelines, there was really no spring housing market, okay? There was just, everybody was afraid. They didn't know what to expect with COVID. So now that we're seeing a little bit of stability in the housing sector, we're seeing people come off the sidelines. We're seeing houses come on the market, and we're seeing people back out in droves, and we're seeing multiple contracts on properties that are then pushing home values back up. So whereas we didn't have a spring housing market, we believe, those of us in the housing industry believe that this summer is going to be the spring market times 10.
Wow. Final question for this brief visit. What about folks who've been struggling with credit? Maybe they've been turned down with other institutions. What can you do for them differently?
Well, okay, so right now, we've always gone down to a 500 credit score. And we have been your one-stop shop because we are a broker and a lender here at Cornerstone First Financial. So I like to say if I can't do it, nobody can. Now, we have raised that minimum credit requirement, so it is harder to get a loan right now. We were at 500. We're now up to 600. But most banks on Main Street aren't going below a 640. So while we'll still get down to a 600, we can still facilitate getting that loan done that you couldn't get somewhere else. But again, we have the rates down in the twos for the first time in the 16 years that I've been coming on your show. 2.5% to 3% on a conventional conforming loan. Unheard of.
Time to talk to you, I'd say.
Yes, absolutely. Give me a call after the show, and we'll refinance you, Don.
All right, just might do that. Hey, folks, you need to call. As a matter of fact, loan officers standing by right now at Cornerstone First Financial. Take your call. You don't have to wait till tonight or tomorrow. You can do it right now, 202-625-1221. That's 202-625-1221. Or just go online to cornerstonefirst.com. Mark, good to talk with you. Thank you.
Hey, you too, Don. Awesome. Great to talk to you, my friend. Take care.
Mark Livingstone, founder and president of a great company, Cornerstone First Financial. One more time, that phone number's 202-625-1221 or online at cornerstonefirst.com.